There's one thing that's the talk of the town at the moment, and it's interest rates. So today we're going to be talking with Chief Economist Stephen Halmarick from CommBank about what's going on, what's happening, and what his insights are for the rest of the year. We've got Stephen Halmarick, Chief Economist at Commonwealth Bank. Stephen, thank you for joining us today. I'm sure it's a very busy time, and no doubt you've got a lot on your plate. So we're going to keep it quick and short and sharp. I guess yesterday we saw an interest rate rise. What were your thoughts yesterday?
Yeah, well, thanks for the introduction. Thanks for the question. Yeah, we had been expecting a rate rise from the Reserve Bank in June. We'd been expecting that increase for quite a number of months. So at the start of this year, we changed our forecast to expecting a June rate rise, and at that time, most other economists were saying maybe August or even November this year. So we were I guess the first to call an early rate rise. And the Reserve Bank had been saying that they wanted to see both the inflation numbers, which came out a week or two ago, and the wages numbers, which are coming out on the 18th of May, before they then raise rates. So they were saying that through April, and then so we had stuck to our June forecast. But then yesterday we got the rate rise, and what the Reserve Bank said was actually the inflation numbers were so high. Actually, they described them as a shock. The headline inflation rate 5.1%, and that their business liaison program had been telling them that wages were rising, so they decided to jump on the rate hike, a month earlier than we thought, but pretty close to our forecasts. But the other thing that was surprising yesterday is they actually raised rates by 0.25%, by 25 basis points to 35 basis points, and that's an odd number. Usually, the cash rate is 25 or 50 or 75 or higher. And actually, no economist was picking a 25 basis point rate rise yesterday. Some were at 15, some were at 40, some were at zero. So
Wow.
that kind of surprised people.
So
But
yesterday was a
yeah,
surprising day.
it was a surprising day. So it was a little bit surprising that they moved yesterday, and surprising to everybody the increment. But now the process has started, and there's more coming.
Yeah. So on that, you know, how long do you think it takes for interest rates to sort of creep up? Is it every quarter? Could it be in a year? Well, what's your prediction?
So we think it's actually going to be pretty quick. So we're actually expecting another 25 basis point increase, a 0.25%, for the next three meetings in a row. So June, July, August,
Every
and then
month.
every month, and then
Wow.
another one in November this year. So June, July, August, November. So that'll take you to 1.35% by the end of this year. And then we've got another one in February 2023, so 1.6% by Feb. Now, we think they'll finish there, or at least pause for a long time at 1.6 to allow the data to come through to show them what impact is that having on the economy and particularly the housing market. But the markets, financial markets, are actually pricing in the cash rate going up to 3.5% by the middle of next year.
Wow.
Now we just do not see that happening, so it's going to be really interesting to um, see. Our forecasts are going to be right, we think, relative to what the market's currently got priced in.
So, obviously, CommBank does a lot of mortgages. I've had mortgages with CommBank. Are you still seeing a lot of buyers out there with an appetite to buy?
So I can't talk specifically about what we're seeing in CBA, but you can see through the data that home loan approvals, or home loan applications, I should say, actually been holding up quite well in the
Mhm.
last couple of months. There was some sign of a bit of a slowdown late last year, and then they re-accelerated it through early parts of this year. There was a bit of a slowdown in January, I think, because of Omicron. Um, but maybe part of that was people seeing that some higher interest rates were going to come down the pipe, and trying to get in at these kind of lower rates, particularly the lower fixed rates. While the opportunity was still there. Over the next few months, we'll be watching the data pretty closely to see whether the higher standard variable rates and some increase in the fixed rates does impact those home loan applications.
Yeah, I mean, interest rates were so low that even the increases you speak about are not really out of the ordinary, right? And
Yeah.
there was this just insane uh, price wars on properties, last year and the year before.
Yeah.
So, if prices drop 10%, but interest rates go up a little bit, as a buyer, you're actually in a better position, right?
Yeah, so on house prices, or dwelling prices are up 21% across the nation in 2021. That's pretty extraordinary, even higher here in Sydney. So for 2022, we think they'll be flat, and 2023, we think dwelling prices will be down about 8% across the nation. But if they're down 8% by the end of 2023, that's really only back to where they were like in the middle of 2021, right?
So
So,
on that, because
yeah,
that's an incredible point. When you
yeah,
say they're up 22% or 21%, and then they're going to be flat, does that mean they've increased and they're going to stay flat at that level, in your opinion?
yeah,
So,
that's right. Yeah.
so you're thinking for the next year, we're going to stay at the prices we've seen for the past 1 or 2 years, and then after that there'll be an 8% decrease.
Okay, that's correct. Yeah,
So,
that's right.
and then as it's even different in more blue chip areas, right?
Yeah.
The more affluent areas, the areas where there's a much um, bigger supply and demand model, I guess, if that's the right way to say it.
Yeah.
Prices could stay higher. They're less likely to drop. It.
Yeah, so we can those numbers I quoted are national, and you can see capital cities, different capital cities have had very different experiences. Like Sydney's been quite strong relative to say Perth, but then regional has been very different to cities, and then within cities, and as you and I know, Sydney's a really big place. So what's happening in the higher end of the market versus the middle end of the market versus the more affordable end of the market can be very very different. So I would imagine that's going to persist. And as you mentioned, that gap between the supply and the demand. So where's the new supply coming online? Well, it's more in the outer reaches of Sydney, where they're trying to build a new infrastructure to really help grow those communities more affordable. But closer to the CBD, there's not much spare land, and there's not much new supply coming on relative, right?
Yet there's plenty of buyers. So if
Yeah.
you were a buyer, or you were advising anyone, and they were looking to buy in good areas in national cities, you'd be telling them not to freak out.
Well, I don't give I can't give financial advice, but I think not freaking
Fair
out is
enough.
always a good thing. But yeah, I mean that's for those who have been in markets for a long time. Um, we could not have expected the cash rate to remain at 0.1% forever, and on our forecast, it's going up to 1.6%, which is still historically a very low rate. It's definitely higher than where it is today, and but the economy, the reason why interest rates are going up is because the economy is in good shape. There's a lot of money about through the fiscal
Oh,
transfers. The unemployment rate is close to its lowest since the 1970s. People have saved a lot of money through the COVID-19 period. So when there's more money about, more demand than supply, that puts up upward pressure on prices. The Reserve Bank has to respond to that with higher interest rates. But that's a flow on from the strength in the economy.
Stephen, this has been very informative. Thank you for your insights. Thank you to Combank. We really appreciate it.
My pleasure. Thanks very much.